Hey, everybody, welcome to Steve Couper's podcast for aspiring real estate investors and for accredited investors who are interested in learning how industry subject matter experts and other busy professionals in the real estate investing space, what they're thinking, what information they can bring to the table to help us all understand this magical area better. So today I'm super excited because I am actually hosting with Karen Wilson, who is an aspiring real estate investor. As a matter of fact, a very successful one. And I can't wait to learn all of her insights, tricks, and tips for how to make magic with real estate investing. Without further ado, and before I bungle this any further, I'm going to introduce Karen. Why don't you tell us a bit about yourself and also maybe correct anything I've misstated.
Oh, I think you're okay so far. So, hi, I'm Karen Wilson. I have been a real estate investor for 20 plus years. I got started out of the blue actually many, many years ago because a friend of mine came by and said, "Hey, you want to invest in some real estate with me?" And I was like, "Oh, I don't know anything about that." She handed me some books, and that's what got my real estate journey started. Things kind of zipped along, not at a super fast pace for many years. I was doing projects, but not very many and fairly spaced out till about 2 years ago when I guess I kind of had an epiphany that I really needed to change the nature of my portfolio. And so really have stepped up my real estate investing in the last 2 years, going from sort of 3 projects to now I have 9 or 10 projects.
9 or 10 projects.
So
What do you do during the day? What is it?
I
I know that you're still working professionally as well as real estate investing. It's something that I share this, so I'm interested in how you succeed. Tell me your secret.
so I am a project manager in my day job. Okay, I'm technically on the agile side, which is a software development thing, but for the general public, I'm a project manager. I'm an accredited project manager and have been for many years. So I have a lot of practice organizing a bunch of people to get to a common goal. So I actually totally use those skills in real estate all the time, getting a bunch of investors all on the same page to invest in something, getting a bunch of professionals all working to actually make the deal come together. I use those skills with tenants as a project, like when I'm doing property management. So yeah, my day job skills are dovetail extremely well with deciding to do real estate work. And so I'm both a passive and an active investor. So I have projects where I get involved, usually passive projects for me. I select them often because I want to learn more. So there's a financial, obviously, benefit to doing them. I would never invest in a project with the objective of losing money, but I often pick the ones that I'm going to do because it's an opportunity also for myself to be learning more. So I'll pick projects that are of a nature that I maybe haven't done as many of or where there's a particular element to the project that I want to learn more about. So on the passive side, I'm always learning. And then on the active side, I'm able to take on things and use what I've learned in other activities to drive those along.
Excellent. Most excellent. Can you maybe describe your investment philosophy? What are the key factors that influence your investment decisions? How do you decide which one's a yes and which one's a no?
Which one's a yes and which one's a no? So the first thing for me is, I guess, probably risk. I am not I'm an investor and not a speculator. So I want to look at that project and I want to see concrete evidence that whoever's put that deal together has really thought about what could go wrong, what are the downsides. And I guess this comes out of the project management world too. I'm really interested in what is the risk and what risk mitigation do we have. When I do my own deals, that's again a super big factor of like always, I think anyone who's an underwriter who looks at my stuff, I'm a pretty conservative underwriter. I do not want surprises when I get going. So like that's probably my number one investment decision is like, what kind of risk are we talking about? So there are a lot of projects that I step away from right away. I don't do, for example, very many projects in the land development space. I'm not saying I never buy new builds, but I tend to be on the side of I acquire it after it's built. So I do buy new builds, but I'm not buying them before they've been developed because I'm not willing to carry that risk. So I'm pretty conservative from that perspective. Lots of people tell me all the time, "Oh, you could make so much more money, but you could also lose so much more money." So like upside downside of that. I prefer to give up the really exciting downside to have less of it. I'll take my slightly less upside to avoid the painful downside. So risk is a big one for me.
It's absolutely scary to me how much your words sound like mine. I'm
Maybe
gonna,
it's from, it seems to me you're a project manager too, aren't you? So like you also have a lot of opportunity to see what goes wrong
I
in
have an
projects.
opportunity to see what works and what doesn't, and I too am very risk of, or I won't say risk averse, but I like to manage and mitigate risk to the point where I feel I'm comfortable with it. And as it applies to real estate investing and land development, it's hard to manage things that are outside of your control. And in land development, there's so much of it that resides with the city or other influences in the neighborhood.
Or even just time.
Time,
Yeah. So that's a big one for me.
yeah.
And I think the other big thing I like, so okay, I'm always looking to make some money, but I don't have any hard and fast rules of like if it doesn't like make 25% ROI, I'm not interested. That's not where my rules are. It needs to earn a good income. And then it's like, what can I learn? What can I learn by participating in this project? Because I can't participate in all the projects. I can't even participate in all the projects that I'd like to that people put in front of me because I don't have an endless bankroll. So yeah, it's what can I learn from doing this?
Well, we're on a good trend here. So, I mean, in your past investments, let's talk about some of those lessons you have learned. What worked well and what did not, and how does that shape your future?
What worked well? Like I'm glad we get to start with what worked well
Yeah,
because the what didn't work well
upsides
is
are
a much
good.
longer story. So what worked well? So I've had amazing success with partners. So we'll gloss over the one of my very first real estate activities did not go well. But what I took away from it was you really, really have to know the people that you're working with. So my first one like that, I knew everybody in that deal personally. And even today, the deals that I get involved in, I want to have dinner with those people. I want to spend time with them. I am not really interested in doing deals with strangers. I mean, I tell this actually to people frequently, often new investors that I meet where I, share my two bits here and there of, there are real estate deals that you'll be in that last longer than many marriages. So like you better or at least be able to work with the people in that deal. Because even a passive partner, you still have to work together. It's not just a matter of they hand you your money and you never talk to them again. You will have to interact with them as things change in the project and as stuff happens. So and you never know what's going to happen. So people that you actually feel that you can work with is super critical. And so I've had really, really great success with that. So yeah, it's probably my number one favorite thing that I've learned, because at the beginning I actually almost didn't go down that path. I was putting a deal together. I've been working on it at the time. Mortgage rules had just changed and I couldn't just buy this triplex I was trying to buy by myself. I wasn't going to qualify for the mortgage. So I needed some partners so that they could qualify for the mortgage with me. So I worked at it. I found a bunch of people that I knew that were interested, brought them all along because none of them knew anything about real estate investing, got to the place. Now, it took a long time to like educate everybody to the point where they were going to feel comfortable to actually give me money to do this with. And during that time, just before the close, like I actually got a full-time job and I could have actually just done it by myself. But I'm like, I've spent all this time getting all these people ready to invest with me. We're going to invest as partners. And so I decided to continue down the partner path. And I have been so happy that I did, because there's just been so many unexpected upsides to that. Like I now have a couple of people that when really weird stuff happens that I can call up and be like, hey, and then you have multiple minds thinking about the problem. Now, most of the time I just deal with stuff. I'm the active partner on that particular deal and I do all the property management for it. So like normally they don't hear from me, but if something really big happens, then I call them up and we have a quick conversation and we get different minds thinking about it. And we're all, I guess, enough on the same page. We know each other well enough that we can come to a decision and then move forward. But it's been great. And like, so one of my partners, there's certain times where like they have different skill sets than I have. So there have been moments where like, hey, this happened. And somebody will say, oh, well, hey, I'll just come look after that. Don't hire someone to do that. I'll just come do it. Or, like I say, different ideas, different points of view. It's been wonderful. I can't say enough good things about it. I know that there's people out there with partner horror stories, and what I say to that is that you mustn't have known those people very well when you things going.
It's a true statement. I think that's one of the best parts of real estate investing for me has been the community and the people I get to meet. It's just an amazing group, and I love working with them. So I couldn't agree more. You didn't mention any of the
I have lots of those too. I mean, so I'll tell you, okay, the very, very, very first real estate deal that I got into with that friend that came by, the two of us, we were actually about to buy something, and we were introduced to someone who had like the complete package. And you could go, and so as a mortgage broker, working with an accountant, working with a builder, and we could buy these things. So we got into that. They talked us out of what we were originally going to buy. We went down that path, which was also, by the way, completely fraudulent. So that led to a large bunch of problems. We wound up as being the owners of a couple of pieces of property that were not even worth the value of their mortgage. So we basically held them for, I don't know if it was a decade, but close to a decade, till it got to the place where we could sell it for what the mortgage was worth. And so this is one of the things that I bring to the table now of like when I see, and you see this a lot right now, actually, especially in the new build space, where you have these partnerships between a builder and a real estate agent and a broker and a lender and a property manager. And if that's all working, like they're all working together, which is great if it's legit, but a huge problem if it's not, because any one of those people would be the checks and balances the deal normally. So if you were sourcing all those things and putting those things together on your own, you'd get contrary feedback potentially from some of those people about your deal. When they're all working together, yes, it might be really awesome because it's super easy and you've got all this stuff lined up, but you have to be very careful because the property manager isn't going to say to you, and by the way, these rents are totally unrealistic. You're never going to get that. Yeah. So, thing I learned very early on that crops up now in my life when I look at deals, because I have seen a number of deals where I'm not saying that they're fraudulent deals, but that I recognize that extra due diligence is required there because you need to do some searching outside of this convenient package.
Yeah, nice. I love it. So you're working on, as an active partner, on a deal right now, I happen to know. And if I recall correctly, this is in Calgary, Alberta. I am interested in learning a little bit about that. Why don't we share that on this podcast? Tell me about your deal.
All right. Well, actually, I have two deals I'm working on. So I'm like, which one are you talking about? Okay, so the Calgary deal is really interesting because it's a new build, but not in the pattern that you see a lot of in Alberta. This is buying the new build at completion. So when I say at completion, I don't just mean like the building is finished being built, it's leased up. So like you're actually going directly to the lender with it already ready to go, which is less typical in Alberta, but it's a type of deal I've done quite a few of here in Ontario. And in this particular instance, the builder is guaranteeing a particular loan to value from CMHC, which I'm not going to assume that everybody is deeply familiar with CMHC loans. So I'll just say that. So one of the things there's the things that CMHC is looking at is your debt coverage ratio, and the things that influence that tremendously. And I'd love to say that my math skills are really awesome and I figured this out just by looking at it, but I just underwrote a lot of deals. And so I know that the things that have the biggest impact on that ratio are your income, your rent, compared to your mortgage. So the interest rate affects that. So it means that for them to guarantee a particular loan to value, that means they're going to reduce the price of that building to meet whatever they need to meet that matches the income that's coming in from that property compared to the interest with the interest rate at that time. I dropped the factor of expenses because it's the same building. So that doesn't tend to have particular variability in this scenario, but the potential rent and the potential interest rate have huge impacts. And of course, when you're buying a deal like that, you're getting into it before they've built it because they're not starting to build until they have a commitment, but it's a year, potentially, usually about a year before they're leasing those up. So that's a lot of change that can happen. I mean, yes, maybe it will be fantastic change in the right direction and rents will be up and interest rates will be down. However, that's not really the market we're in right now. So it's a huge benefit as far as risk protection.
If I understand correctly, just to make sure that I'm sorry, don't mean to interrupt.
Oh,
What
all
you've
good. Go.
done, what you've done now is you bought a property that is fully complete and leased up. So you've got guaranteed rents, and they're guaranteeing you a loan to value that passes a DCR for CMHC. So in other words, they're reducing the purchase price to a point where your debt coverage ratio is actually going to work for the interest. So if the interest rates went up tomorrow, they would drop the price.
Yes. And if rents come down, they would drop the price. And if both of those things happen, they are not going to be happy.
Interest, and if the interest rates come down, your price might increase.
Well, it won't go up beyond the agreed upon price, but it will come down to meet the LTV. So I have a little variability because we're going into it with a deposit of basically 7%. So which I could have to increase that deposit to 10% if it's the 90% LTV. So there's a little variable, a little risk on my side as well. However, pretty small compared to the alternate you've seen a lot of in the last 2 years, where you're just buying something and hoping that a year and a half from now it all works out.
I think that's a great strategy, well thought through. So this is in Calgary, and I know that Calgary's got a soft spot in your heart. Tell me why. What's going on there?
Well, all my family's from Calgary, so I grew up there. My mom and dad are there. My sister's there, and right now my son's going to university there. And okay, I'm admitting it. It's true. He's never coming back. I did not think about this when I sent my son off to such an awesome place to go to school, and he's out there in the mountains doing his thing and having the time of his life. He is never coming back to Ontario. So therefore, I need property where he's going to be.
There you go. Well, I would say never. Future plans. What's next?
Well, future plans. What's next? So I have a second deal that I'm actively working on, which I'm sure I'll have many adventure stories to tell very soon. So I'm working on a 4-plex to 6-plex conversion in Prescott, Ontario. So that's exciting for me because it'll be my first active round in a value add. So I've done a lot of new builds in my career thus far. So I'm kind of excited to be doing a value add. I have done renovations to other projects. I guess technically those were value adds, but not in the same way that this one is. This one is more of a classic value add where we're buying the building as a 4, converting it so that it's a 6, refinancing it to pull the money back out for the investors, and then operating it from there. So that's kind of exciting. And it's been a bit of an adventure. It's been quite a long time since I have been working on a residential loan. So I very quickly was in the place of I'm only interested in things that are like 5 and up so they can be commercial loans. This one fell into my lap out of the blue. I wasn't looking for it. I was actually in town shopping for something else that we'd already bought. Actually, we went to see it. We were already committed to it. But while we were there, we went over to this other property, and the stars just aligned that the person who owns it was talking about how frustrated they were that they had this great deal, but they had no one to buy it. To which I said, well, I'm not even looking at it because I don't do residential because I have no way of carrying that mortgage. And most of my investor pool that I work with aren't really carriers of residential mortgages. So, but we happened to have just partnered with another couple that we were there with who were like, well, we could carry the mortgage. And, then we were talking about through some of the other problems. In fact, it worked much better if you owner occupied. And then like, hey, my girlfriend just happens to have recently moved out of her place and is like at loose ends and would be okay to owner occupy. And she's the person who got me into real estate investing in the first place. So she's interested in really, so poof, out of nowhere in 15 minutes conversation, a deal was born. Who knew? Not how deals usually come into my life.
No, typically not so for me. I actually have the opposite. I go hunting, and it's like I feel like it's back to the hunter-gatherer times. You miss so many times before you finally hit something.
Oh, yeah, for sure. Well, that's my usual experience. It's usually digging and underwriting and digging and underwriting and hunting and going to look at stuff and like start that cycle over and over again. They don't use it.
I mean, one of the questions I really wanted to ask you was to dive into your decision-making process. Understand how you come to decide, okay, this one's a fit and this one's not. And I think we just blew it out of the water. So I'm not sure. But we talked about how risk management is key for you and I, and a lot of serious underwriting, trying to make sure that we we review things in such a way that we've stress tested every opportunity. And yet the fourplex that you just talked about is going to be the exception to that. So, but that process.
Well, I unwrote it many times after that 15 minutes, though.
Okay, well then it's okay. So well, let's explore this decision making process a little bit. Is there emotion involved, or is it all about the numbers? Is it something that you have to have all the stars line up from market analysis through underwriting, or is there some place that you've got a bit of an emotional attachment to that you're going to actually say, yeah, I'll build here regardless? Where are you at? What makes you tick?
Where am I at? Let's see. Well, I mean, obviously, I'm shopping in Calgary, so sometimes emotion is involved because, like, I'm emotionally attached to Calgary. That's why I'm shopping there because it's probably not most people's first choice in market.
It's not the
But
right market
in
right now in most people's
it,
minds.
it's hard. So that's why I've been looking for like
Yeah,
2 years to find this deal that I finally found one that I felt was a deal I could get into. I guess interesting question. The numbers have to work. The underwrite has to look like I'm not interested in negative cash flow. I'm not interested. So there's some basic things that all have to get ticked off. If you put
yes,
a deal in front of me that has negative cash flow, I am never going to say yes to it unless there's some way that it is somehow stopping being negative cash flow because you bought it and you did X and that's why it won't have negative cash flow. I
gotcha.
say this because this 4 to 6plex will have negative cash flow for the first 6 months because we're renovating some of the units. So in a building as small as that, it is not carrying itself while those 2 renos are going on. But it's a short period of time with a very fixed end, and there's not a lot of mystery there. I'm definitely not into this whole I'm going to lose money so that I have like a write-off on my taxes or whatever. That whole strategy, which I've heard from many people, has never made sense to me. And then yeah, I can say it needs numbers that make sense, but I don't have a specific number. And honestly, if you were to float a number in front of me that was most real estate is kind of around the same spot. I guess
Mhm.
that's where I'm going. Unless you step into something that has significantly higher risk, there's variation in the numbers, but they're not gigantic. So I guess I would be quite skeptical if you put a project in front of me where, like, so somebody popped a project in front of me that was a new build that had like 40% cash on cash. And I was like, absolutely no way that's real. Like, there's no such thing as a new build that was built for so little money that it could have huge cash on cash. And as soon as I dug into it, I found all the holes that
Yeah,
said, like, yeah, okay, all the assumptions that are in this thing that came to this massive cash on cash are unrealistic. So yeah, so from that perspective, the window is like not that gigantic for projects that have relatively manageable risk. And so then it's about who's involved because I want to work like I will pick projects because there are people I want to work with more so than like I don't have particular markets I'm attached to. So like I have properties in multiple markets. I have some properties in Alberta. I have properties in various places in Ontario. I'm part of one activity in the United States, which again, that was a total, I want to learn something here property. It's very outside my norm. But yeah, so then so who do I want to work with and what am I learning? Those are my 2 big pieces because I want to work with people that I know and trust. And I want to keep growing as far as my knowledge and experience goes.
I love it. I love it. Well, then let's take that theme a little bit further and let's talk about your goal. So as we look at or get into real estate investing, we have a goal in mind, and it tends to actually evolve and blossom and grow and or change or go way over here for a while and before it coming back in front of us. I'd love to understand what's your goal? How are you going to recognize success and tell us about that journey and where you're headed.
That is a super interesting question, Steve.
Hmm.
So I say this because there's what I thought my goal was, how my goal has evolved, and a whole bunch of things I've learned about myself as a function of starting down this path. My goal is to retire myself and my husband. I guess technically I have retired my husband, but it's not really a function of my real estate activities. I just realized that he could do that and it would be okay. But like, I'm not going to lie to you and tell you that my real estate portfolio has transformed that much already. It has not. It takes time, because that's one of the things about real estate. Real estate is not get rich fast, it is get rich slow and steady. You need time for that to work. So that's my goal, is to retire myself and my husband. It's kind of evolved a little bit, because what's really changed, and that's really, I think, been a huge value to me going down this path of things I never saw coming, is really, it's the mindset change and the personal growth stuff that has had the much bigger impact. I love all the things and I don't mean the technical things here. I mean, I've learned many technical things about real estate, but the elements of mindset and, I guess, self knowledge and the ability to drive myself and understand my own nature and what I need to do to like make all these things happen has been amazing. So I kind of chuckle, because see, I had a goal in my first year that I was going to buy this property in Calgary. So that was one of my goals. I had like 7 other goals. And at the end of my first year, I was really upset, because to me, I had been completely unsuccessful because I didn't buy that property in Calgary, because I could not find a property in Calgary that made sense to buy. So I was really looking at that as like, I've totally failed. But like, everybody else looked at my achievements in that time frame and were like, wow, that's amazing. You've got like 7 projects happening, and like you've done all these things, and you did this and you did this and you did this. But to me, I was just focused on that one thing. So one of my big, I guess, growth learning this year is really just sort of looking at the full picture and not fixating on like this one little thing. And like, there was this book that I'm reading that someone recommended to me. It's called The Gap and the Gain. And so, I think the tagline is something, a high achievers recipe for like happiness and success, or something like that. So it's talking about the importance of not just living in the gap, because and this resonated so much for me, because as soon as I have a goal, the second I hit it, I'm looking at the next goal. So there's always a gap. There will always be a gap, because I'm the kind of person that whatever the yardstick is, as soon as I get there, I'm moving to the next thing. And I tend to discount that in the sense of like, well, if I could do it, anybody could do it. So like, well, now let's do the next thing. So trying really hard to recognize all the things that I have also done and also achieved and also learned. So I would say that whole mindset and personal growth aspect of having chosen to wander down the path of real estate investing has been amazing.
Awesome. That is so fun to hear. I enjoy that. But you know what? I'm gonna tell you that all of my goals that were in the first year, what I should be accomplishing, etc. I have had similar frustration with the fact that I didn't get what I was looking for in year 1. But I look back over the last 12 months, 24 months, 36 months, and I try and remember where I was then, and the growth is huge, right? It's amazing how far you can come, while at the same time, your goal, which may have been, I'm going to do this in first 6 months of doing it, it's a different goal now, and it's coming, but it's not the same thing. Karen, it's been an absolute delight having you on this show. It's taken far too long to bring this together. Any last words? Actually, what I'd like to say is, how should people reach you if they want to invest with you?
Well, they can reach out to me. Facebook is a really easy way to reach out to me, or send me an email. It's greenbardproperties@gmail.com. I'm open to whatever. Or they can reach out to you and you can connect me with them if they're people
Absolutely.
that know you. But yeah, Facebook is an easy way to find me. But yeah, always eager to meet new people and find new real estate friends, because real estate people have a certain, like, they just have a different view of the world, and it's been a delight meeting people and getting to know them.
Yeah, I couldn't agree more. Thank you so much for joining me today, Karen. It's been a pleasure. Any last words for anybody out there?
Take action. Don't just think about it.
Perfect. Okay. Thanks, everybody. Bye now.